Welcome to the Kinvestor Report, where we sit down with analysts and industry experts to discuss the latest developments in the junior mining, commodities, and small cap stock market. I'm your host, Arlen Hanson. Please be aware of our disclaimer in the description below that no part of this interview should be taken as investment advice, and that Kin Communications may or may not be compensated by any of the companies discussed in today's interview. If we hold securities in the stocks mentioned, we will disclose. Today, I'm joined by Warren Irwin, founder, president, and chief investment officer of Rosseau Asset Management, a Toronto-based hedge fund specializing in natural resources. Warren founded Rosseau in 1998 after several successful years of proprietary investing at Deutsche Bank Canada. As CIO, Warren has managed Rossau's fund since its firm inception, and being ranked Canada's top-performing hedge fund for the 20-year period ending December 31st, 2018. Warren's got some really cool stories. He's made a ton of money. He has also certainly made some waves in the social media space with some different opinions in the market. And we're certainly glad to have him on the show to have a little fireside chat about uranium, copper, gold, state of the markets, and we'll tap in a little bit of the Bre-X too, which I think is a really fascinating story. So Warren, thanks for joining us today. How you doing?
Doing great, Arlen. Thanks for having me on.
Yeah, right on. Before we dive into everything we're going to talk about today, which I'm super pumped to talk about, give us a little bit more background on Rosseau Asset Management.
Okay, well, Rosseau Asset Management was founded by myself in 1998. So we've been around a very long time, 26 years. And prior to that, I'd been in the business since 1986. So I've been in the business 38 years. 26 of which I've been doing the exact same job at Rosseau, and 3 years prior to founding Rosseau, I spent 3 years doing the exact same thing at Deutsche Bank, proprietary trading for them. We run primarily mining. We're a mining hedge fund. I believe we're the longest running, and possibly one of the most successful, if not the most successful mining hedge fund out there in the world. So not many people have a 26-year track record, as you can imagine.
Yeah, no, it's tough. It's
In
tough,
a business,
right?
in a business as cyclical and difficult as ours in the mining sector, it's tough to be able to survive that long. So I have, and perhaps we had touched on some of the reasons why I'm different than other people, and I look forward to chatting.
Yeah, cool. Well, you said you've been kicking around for 38 years. So, and I've read a little bit about your profile, and I want to chat a little about this Bre-X story. And we'll only go for a few minutes, but super fascinating. And you were right there. Like when it you did the property visit, and I saw your tenacity to get there because your money was on the line.
Yep.
And so tell us a little bit about the experience and how that shaped your investment philosophy moving forward too. Because I'm sure you learned things about that you applied to your successful career.
Yeah, well, people they keep asking me, well, why are you sharing your stories about Bre-X, and why are you putting all the effort in to write articles? I wrote an article. So if you Google my name and Bre-X, there's one I did for CEO.ca. And the reason I'm doing this is I learned a tremendous amount at Bre-X, and it's possibly why I have such longevity in this career. I learned so much in that whole Bre-X. It was like an MBA jammed into reasonably small, an MBA in mining jammed into a small period of time. So I learned a ton. I met a ton of interesting, exciting characters, and I made a whack of money. I think I had a position of 5.6 million at the peak. $1 million of that was margin, and I think net I netted out about $3.5 million, both long and short Bre-X. Some people know me as, oh, he's the guy who made money on the way up and the way down. So when I thought it was a fraud, I shorted it. And on the way up, I made a pile of money. I made most of the money on the way up, a little bit of money on the way down. And I'm not sure if you're aware of this, Arlen, but the BBC has just released a 9-part series on
I started diving into that.
Yeah, cool. So I'm in I think episode 2 and episode 8, I think.
Yeah.
And it's ranked #1 on Apple Podcasts right now. I listen to it myself. It's fantastic. A lot of people on the podcast were being interviewed from the grave, right? You had interviews from Jim Bob Moffat of Freeport. He's a legend, and to hear his voice, from the grave, because he's long since he's gone. So is Peter Monk gone, and all these mining legends that were part of Bre-X, they were able to get all their recordings and interviews, and it was fascinating. And they were able to interview, a few of us that are still alive. And the reason I'm alive is that I was so young when I started. I was, I think, 31 when Bre-X happened, or 30. So I'm still around, I view it as my job to share the lessons with the would-be investors of what I learned and encourage them to read my article, watch the BBC podcast, and you'll get a flavor for some of the neat things you learn in mining. And
and yeah, you can learn a lot for sure.
yeah.
Yeah. And so what did you learn, like particularly?
Well, first I learned, and I've never seen this since, the 90s were fantastic. Fantastic. It was so much fun. We had $4.3 billion created of wealth by Robert Friedland. And we're talking 4.3 billion 30 plus years ago, spread amongst a really small Bay Street. Can you imagine what that did? And then, okay, you just had that happen. Then you had a $5.6 billion market cap peak of Bre-X. The amount of money was being made, the amount of speculation. And that was back in the day. It doesn't happen anymore, but you'd have mining companies, the front page of the Globe and Mail. Now, all the papers are really afraid of getting involved in any mining stocks, giving they all think they're going
to get their hands slapped, right? Like, oh, no, yeah,
no kidding. But it was, Bre-X was in Diamond Fields was just adding fuel to the fire of the mining sector. It was on the front page of the Globe and Post every day, and you just couldn't miss it. So anybody who wanted to play, they knew all about it. It was really exciting times. People don't believe this, but every junior that I remember seeing in the mid 90s, or probably mid to late 90s, just before Bre-X blew up, had 100 million market cap. That's 30 years ago. 100 million market cap. Any junior, all you needed was somebody who was a president, who had a pulse and could breathe. You had to have a property, and you had to have a listing. And it didn't matter how good any three of those were.
A telephone, right?
But man, it was truly incredible, because when you think about it, 4.3 billion created with Voisey's US, so that would be what, like around 6 billion Canadian. Then you had Bre-X at 5.6 billion peak. You could imagine in the months leading up to Bre-X, there's been well over $10 billion in wealth created to a very small Bay Street, which was probably about a third the size it is today. So, and then inflation adjusts those numbers. It's like
crazy.
It's like a $50 billion win today if you factor in the fact that Bay Street's bigger and the inflation rate. So you're looking at it's like somebody had tens of billions of dollars created for investors in Toronto and in Vancouver. It was an incredible time. It was tons of fun. Lessons I learned, well, you could, I encourage you to read my short 4-page article or the BBC report, but basically quick and dirty there is just that mining executives are incredibly, I'd say the majority of mining executives lie to you, and to the varying degrees. Some are outright frauds, but I would say probably 75% lie to some degree to a lot. The lot crowd is probably obviously sub 50%, might be 25, 30%, but you're going to get lied to in 75% of the instances. Very few mining executives are straight up and honest. And then you want to stick with the guys who have got a proven track record, to straight up and honest. The problem with that is sometimes you're paying a premium getting into it, because people will pay a premium for a Ross Beatty or prior to Lucas's death, Lucas Lundin stock or Discovery Group stock. There are the groups of people that are proven winners, and they don't lie, cheat, and steal. And when they bring a deal forward, you'll pay a premium for that, but you won't get robbed. But it doesn't always guarantee success. But when success does happen, they've got the right group of people that are following them and backing them, and you can make some good money on that.
So why do you think these mining CEOs have such a difficult time being honest? Is it because money's too hard and they just have to stretch the truth? Are they true narcissists? It's the mix of anything. Is it new laws and regulations that just made it tougher? So you just got to say what you got to say for money to keep the doors open?
I've thought about that question quite a bit in the last many decades of doing this business. I do a little bit of oil, and the reason that there are more liars in mining than there are in, let's say, oil, is that oil, you've got an offshore oil block, you partnered with Exxon comes in, punches the well.
It is what it is.
It is what it is, exactly. Right after the well test, or I've had a few of the Exxon plug and abandons, right? Those that kicks you in the teeth like right away, right? Whereas some of these mining stories, look how long it takes to
You got to keep
look
the
how
story
long
alive longer, right? Like
you've got to,
you
yeah.
do,
So
yeah.
you find the property, you do the surface work, then you do the drilling, then you got to build a resource, then you got to do environmental studies, and you got to get a permit, then you got to build a mine for many, many years. And meanwhile, that's a very long time before you know the truth. And more than one instances, I've seen the lying continue all the way through. And I've watched the lies continue to the point where there's a mill built and they're ready to start mining, but they've been lying all the way through. And I know there's not a hope they're ever going to have any economics. And the number of mines, if you just look at history, that have actually been built, and within like 2 months, they just shut down because it was bullshit all the way through. But it was good bullshit, and people believed it, and people were dumb enough to finance and to actually build a stupid mine, and everything just blows up. So it's really because of the timelines and the miners. If you're running a legitimate project, you don't need to lie. Like, for instance, with NextGen, I don't think Lee Courier lied to me at any point in the whole process. And I don't think he even stretched the truth. He just
it was what it is with him. Yeah, absolutely.
Yeah. And I like that. I like that because what happens sometimes if miners are liars and they lie to themselves. Let's say you're working away on a project and you're just getting disappointing numbers, but you're out there in the public saying, "Oh, they're fantastic, they're great, and look at this, look at that." If you lie to investors, sometimes you lie to yourself. And then instead of doing the smart thing, which is basically being honest with yourself, this is a crap property, let's ditch it before we spend any more money on it and move on to something else. It takes a lot of intestinal fortitude to do that. And frankly, a significant number of people in the mining business are basically just there going, listen, I was a geo at Rio Tinto or BHP or any other big company, and I left them. I cannot go back, and now I'm going to be a shill for a junior company, and I need about 100 grand or 150 grand to live off, so I could just tell stories, and before you know it, I'll be at retirement, right? I see that a lot where guys, you can just tell their heart's not in it. They're just doing it for whether it be a paycheck or, in some more extreme examples, lifestyle, right? So, but the lifestyle guys are funny, right? Like, so there's a group of people that just do it because they need the paycheck. But the lifestyle guys, they're the most fun because to watch, because not to invest with. Because, man,
yes,
they are living large on your money.
Yeah. So, and they're entertaining, right? They're wildly entertaining. That type of personality does attract capital, and network and people, and they tend to be able the guys that can create liquidity and hopefully shareholder value, right? And they can continue to raise money that way. It's a fascinating cycle, right? Like it really is. Like,
and once in a very long while, these complete cheats, losers, liars, lifestyle guys will find something.
Get lucky.
And get lucky. And people go.
I would rather be lucky than smart sometimes, man. Trust me.
Yeah.
Right.
Well, that's the thing with me, right? Like, people go, Warren, how come you're back in this guy or that guy? I go, if I bought back to Discovery Group or Lucas or any of the brand names out of Vancouver or in the brand names out of Toronto, if I backed the solid guys, I'm paying a big price to get in. Yeah, well, everything will happen. But to me, to make the really big money, I need to back a loser who's just, down and out in Beverly Hills. But this will be his swan song to redeem him after 10 failures in a row. But the guy who's semi-honest and
he'll work 40 hours a day. Right.
Yeah. That's why, I love the mining business, because it's just filled with so many characters. It's so exciting. And the amount of money can be made is astronomical. But recently, frankly, there haven't been the kind of fun stories that have been keeping the mining industry interesting. For instance, when I was younger, I watched Hemlo, right? And then when I lived in Timmins as a kid, I remember the Texas Gulf sulfur when they discovered Kidd Creek, right? So you had Kidd Creek, you had Hemlo, you had before Diamond Fields, you had Chuck Fipke and his Diamet. Then you had Diamond Fields, and you had Bre-X, although it was a fraud. But since then, we haven't had these really fun monster wins. Can you think of one? Like Next Gen was a grinded out.
Well,
win
there's,
for
I guess there's
6 years.
Philo out there is getting the market's attention, right? Like that's been a pretty
Yeah.
big win for
What's
for
Philo at
people.
now? $20?
I don't have it on my screen. North of 20, it's, you know,
North
so
of 20, yeah.
that's been successful. Huge grades, like just massive cuts.
Yeah, no, it's a tremendous situation.
But yeah, but yeah, right. And like when you started talking about that, it made me think, go ask 5 people, or go ask 100 people the age of 30 of some recent mining discoveries. Good luck. Like they're not going to be able to name one,
Yeah, well,
right?
yeah, the fun ones are the like I know for like you could compare Philo, okay? Philo, I know guys who got in at $2-3 and now it's in the 20s, right? And that's taken, it's taken a few years to do it. And then you look at Bre-X, where I know a guy who bought the stock at a nickel.
Yeah.
And it went to $280 at the high. Like that's like if you're not excited about mining, that'll get you excited about mining.
That
right?
gets that gets the blood going for sure.
Yeah.
Okay, so hey, last question, and then we're gonna dive into some like uranium. I want to hear your bear case because that's awesome. But is Michael de Guzman alive? What do you think?
Yep.
Yeah,
it's all explained in my article.
Yeah.
And in the BBC stuff, I think you'll notice I'm kind of the only one who's just out there saying, of course he's alive. These are the reasons why he's alive. Are you guys dumb? But everybody else is going, well, he may not be, this could have happened to, it could have been the Indonesian army that killed him. And I go, you guys are crazy, man.
If you can promote a gold story like that to 6 billion market cap, you could promote your death very, very well.
If he didn't have an exit plan, like, come on.
Yeah.
But I have friends who've seen him since he was supposedly died. So that kind of,
yeah.
And I have friends who've talked to some of his wives. He was, he's a polygamist, right? So he had like 5 wives. I've had friends who talked to his wives. And one of the wives said, yeah, I just spoke with Michael the other day. Like he phoned me up at night and then he wired me 25,000 US. Then he wired me another bunch of money. And I'm getting wires from Citibank Brazil. So Mike took off to Brazil. So he hung there for a while. I think he's back in the Philippines now, I'm hearing. But he's around, he's alive as well. He's, he made on paper publicly 27 million US dollars, which in the Philippines goes a hell of a long way.
And 30 years ago money too, right? So yeah, that's big. Okay, so lots of talk on the commodity side right now. I seem to be repeating the same question right now. What the hell's going on with this market? Like gold's kissing $2,400. We got no bid on the TSXV. Copper's had that enormous run, and a few names did well, but like, what's going on? Is it a structural problem? Is it a government policy problem? Like, where are we going to find this capital to build these mines and explore? And you're one of these funds that like to back these management teams through exploration, right? And you're very few and far between now. Like, where's this money going to come from?
Well, I was kind of asking those exact same questions a few years after Bre-X. For instance, the late 90s was just, if you ask anybody who lived through them, there was like a hell. So what was happening then, the late 90s, all the speculative money into tech. And there was the big internet boom, right? So 2000 was a monster year for tech, right? And people were throwing all their money, all the speculative money was going there, right? So remember, we're in a world, and people go, should I throw my speculative money here, or here? And right now, the speculative money is going into the FANGs, right? They're going into the Nvidias, right? People are playing Nvidia, Apple, Microsoft, Meta, Google. They're playing the techs, right? And they're going to play those until that trade stops working, right? And that's where everybody's going. And so everybody's playing tech right now. So when tech collapsed in 2001, that marked 2001, that marked the bottom in the metal sector, because that same speculative money that loves tech got destroyed, and they were looking for other things to get involved in. So they rolled into the mining sector. And from, let's say, 2001, 2010 was 10 years of just, you could be an idiot and make a ton of money in the mining business. And then it got kind of bouncy. It's been bouncy kind of from there. We've had ups and downs and all arounds, but we basically need, it's about capital flow. So we need capital coming into our market. So we need to show to people that that there's tons of money to be made in mining, because people do not remember the the billions made in mining and the excitement and they see that in tech and they think mining's dead and done, right? So what'll happen is at some point the alternative investments that the same speculative money is investing in, that'll go south in a big way at some point, and then people will be looking around going, well, what should we look at? What's beat up? And of course, mining is right.
It's
The
got to
crap
be the
is
most
beat
beat
out of
up.
us.
It's
Yeah.
got to be the most beat up asset class on the planet right now.
Yeah,
It
it
just
is.
truly does, right? So, and that hopefully is the opportunity for us diehards, right?
Absolutely. Like some of the names I'm involved in are just outrageously cheap. Outrageously cheap. Yeah. And for instance, I'll give you an example, right? Like premium nickel, right? Sub 200 million market cap. They're sitting on, in my opinion, what could be something that could be the next Voisey's Bay, if not something very, very close. Voisey's Bay 30 years ago was 4.3 billion US. So I think premium nickel is worth billions like all day long, and it should be trading at $1 billion today. It's trading sub 200 million, right? And how much downside have you got from sub 200 million? Not a lot. So, and I could go through my entire portfolio, and that's the way I invest. They're all like that. They're all, this is worth 5 times or 10 times what they're currently trading at all day long. So at some point, that's going to be realized. And one of two ways it's going to be realized. For instance, let's say I had a name. I'm not going to say specifically premium nickel, but let's say one of my names gets what happens is there's two markets, right? There's the stock market, then there's what the assets are really worth. The big miners are making tons of money right now. So if I get one of my names, I get BHP or Rio Tinto stepping up and paying a big premium for my assets, I make a ton of money. My performance goes up. And other people who are in my fund will start talking to other people, hey, do you see the numbers? And money will start flowing into the sector. But it could be started by the M&A cycle where these big guys are going, man, look at all the properties in properties out there that are super cheap. We're making tons of cash. Let's get out there and start making some acquisitions. And then what'll happen, if I get a big takeout on any one of my names, I'll be sitting on a whack of cash. And what I'm going to do, I'm going to first buy my existing names. So that'll pop all my existing stocks. And then when I'm done getting those to a level that makes sense, I'll start looking at new names and start. So that's kind of how it'll start. And then people start noticing, hey, there's some life in the mining sector. Let's start looking at it. And then the money will start flowing in. And before you know it, you and I are pinching ourselves wondering, like I honestly, for those poor people who are getting the crap beat out of them in the mining sector, I have sat down with a broker friend of mine, I forget how many years ago, and we're just pinching ourselves going, could life get any better than this in the mining sector? And we're going, you know, it just, there are lows, and we're in the low period now, but I'll tell you, man, the tops and the highs are fantastic. And I say to people, whenever I feel like I'm super smart, I sell my stocks and buy real estate.
Everything. Yeah. So Warren, let's talk about this M&A, because I do believe that, right? It's time that we start seeing some M&A. But I'm just wondering what sector do you think we're going to start seeing this M&A? Like what sectors are they making money hand over fist where they can start buying?
Well, yeah,
are they making enough money in gold yet? Like with inflation, like are they, like who's making the money?
Yeah, well, you look at some of the fun ones. I look at met coal, right? Like,
yeah,
if you want to know the smartest people in the mining sector, some of them are Glencore. Glencore is buying Teck's met coal assets. They are smart people. You watch them. Met coal, they're making tons of money in met coal, and those guys are kicking off cash like crazy. That's just one example, right? And then of course on the alternative side, what do you have to do to have the tech thinking and going, oh, let's sell our biggest cash flow generator because of some stupid ESG idiocy,
policy,
right?
Yeah,
like, come on, guys, like that's why I like met coal. In fact, met coal, I'm a big shareholder in a met coal company called Colonial Coal, but there's other great ones out there. That's a higher risk one. It's a junior, but there's like Alpha down in the States. There's Warrior, and if Glencore spins off this coal asset, boy, I'm going to be buying the heck out of that. But so that's one example. But BHP and Rio Tinto are kicking off cash like crazy, right? So,
tons. And because they're diversified, right?
Yep.
Which certainly helps.
Yeah,
So-
being diversified and you know, but you know, the money being generated, and what'll happen is, you know, there's the M&A. I used to be an M&A banker for CIBC many years ago, the early 90s, right? So you see the cycles, right? Like
Yeah.
it goes in the downturns, you go, focus on your core competency. What were you doing the last cycle, making all those stupid acquisitions? Then they go, okay, well, we're off the bottom. They're starting to make money. Well, what are you going to do to redeploy all that cash? You're not going to dividend it back. Get out there and grow the business. Then they go out there and grow the business, make a bunch of stupid acquisitions, and
there we
screw
go
up, and
again.
then they, oh, you should divest of them, and you idiots for paying too much of those companies. And then, well, what are you doing for growth? You better get out there and start buying some companies. And so that's the way life works, right? So,
And I also like to think that like these CEOs, a lot of them aren't any smarter than you or me, right?
oh,
They are still run by fear and greed, right? They're human beings, right? And so it takes a special person to be able to separate that fear and greed and actually make smart business decisions.
yeah, well, what'll
It's
happen?
really tough.
Well, with the big ones, right? You get with the big bureaucratic ones like BHP and you know those guys. You get groupthink too, right? You get a group of people, and then you're the poor CEO, and you got the board of directors saying, "Well, everybody else is making acquisitions. How come you're not making acquisitions?" And then you get the fear of missing out, and then you go, "Shit, if I don't make this acquisition, you know, like BHP right now, you know, I'd hate to be in their position because they're going, well." We got beat out by Wyloo on the Noron acquisition, then we got beat, you know, we screwed up with the Anglo acquisition, as in we thought something that could be done, like that we thought something that could be done couldn't be done, right? And that didn't work out well for them. So they've lost out last two. Maybe they've had a successful one in there that I missed, but you know, when they don't want to have too many unsuccessful M&A transactions on their books, right? And the tricky one too is you don't want to be, you know, being a hostile takeovers don't seem to work very well. They don't seem to work very well if you want to acquire something. You got to do it friendly. So, yeah, there's another example of it, right? You know, it wasn't a friendly deal; it didn't happen, but yeah, there will be a fear of missing out because before long, if not already, these big mining companies are sitting on monster amounts of cash. Well, the other one too is take a look at Barrick. Barrick stock's getting destroyed, right? And you know, the CEO's running around saying, well, our future's in, you know, he's really excited about Reko Diq, right? Like in Balochistan. I have some experience in Pakistan, and they've already had it taken away by the government once. So you're going to bet the future of Barrick on Balochistan and the Reko Diq property? Like, are you crazy?
Yeah.
Like, sure, you're a big, tough South African guy, but for God's sake, you know, like,
Yeah.
like
You're
everybody's
dealing with the
voting.
big boys there, guys.
So I don't know what Bristol's up to, but you know, that's an example. It's because he's going to be under pressure here, or they're going to punt him. Simple as that, right?
Yeah. Warren, I want to dive into uranium because I've asked a lot of my guests over the last 6 months, what's the bear case? And I'm not getting any for the most part. And that scares me